Hi there, welcome to the Option Pit special webinar on VIX and the VIX ETPs, what just happened. Reminder, this is for educational purposes only, should not be considered investment advice. Options have risks. So kind of a rough day for a lot of vol traders because they maybe didn't understand some of the risks that they were dealing with in a name like XIV or SVXY, which were both down pretty significantly today, in fact, crazily. Meanwhile, we had some relatively nutty action in VXX as well. And what I'm going to do is kind of talk about what happened and what is going on with these guys. What is the deal with XIV or SVXY? So let's start with VXX. All right. So VXX is one of the most active ETNs out there. One of the most active ETFs out there. It does a ton of business. You can hear one of the short vol traders in the background if you're not paying attention. And what you see is that, look at the volume this thing did today, 140 million shares. The average volume is 42 million. All right? He's cute unless he's your kid crying. If you look at the long-term track record, let me pull up a chart of this thing. Here, this is the 3-month track record of VXX. All right? Here's the 6-month. Doesn't look as hot, but you can see it's actually trading above its split price, or was. Then here's the 1 year. So on the year over year, it's down, right? It closed 42.88. So on the low bar, and on the year, it opened 75. 2 years, it's off significantly, right? This is $500. So split adjusted, it's gone from 500 to 42. All right, so it naturally, if the long ETN does this, what would you imagine that an inverse would do? What would you imagine an inverse would do? All right, you'd say to yourself, well, of course. Why wouldn't the inverse? Completely do great? And let's look at XIV. XIV, you can see it's $6.94 after the bell. But take a look at this chart. So 2 years ago, XIV was $17. $17. Then if I go to as little as a week ago, at its peak, I believe the peak close is 145. And its high is 146.44. So in a period of a little under 2 years, you made $130. So if 17, or call it out, yeah, $129. So what is $129 on an investment of 17? What kind of return is that? The answer is 758%. All right, 758%. Then, if you weren't careful, by February 1st, right before all this earnings season, we talked about on the 29th, when I was doing the vol report, VIX was already a little elevated. And Andrew and I were talking about it. And what we had said was a couple of things. Let me point out something in SPX. What we said was, looking at a chart of SPX, something's not right, because it's hard to see here, but SPX was rallying, and especially toward the end. Look at these last few days. From about, let's call it 2,800 up to the top of 2,870. Top of 2,872. IV slowly went up. We were saying, and not insignificantly. We're talking, from about 8.5 to about 10.5. And you're saying, well, Mark, the VIX is 45. Well, in a big rally for the VIX to go up 2%, for the market to be up and something like SVXY which was the short, to be down, we've got something's wrong. We made a comment that SVXY was down on the month while the SPX was way up. And then we looked at what was ahead, and we said to ourselves, all right, it's now the 31st. I'm going to go back to XIV. It's now the 31st, or the 30th, all right? What do we got? We got the State of the Union tomorrow. We got non-farms. We have the Federal Reserve, and we have all these earnings. All right, so basically, by the second, and I had said this, if things don't clean up on Friday, something's really wrong. And they didn't. So the good news is you could have gotten out with $100. Bad news is you did not. If you stuck in, you are off. And what happened? All right, so what happened why did VXX die? All right. Why did VXX die? Why did XIV die? Well, the short answer is VIX exploded, but it really comes down to how they're written. So one of the things to remember, these are an inverse. All right. So that means they are supposed to return the opposite return of their regular. So, if VXX, XIV tries to track the opposite of VXX's index. All right, now I would note that VIX futures had a crazy bid into the close again. Something must have been screwy on the TAS trade again. Because the futures ran $2 after the bell. So you look at VXX, and VXX has what we call a tracking index, and it's VXX.IV. All right, this tracking index, you can look at it. All right, and it was down 22.49 as of 4:02. All right, it had a high of $65 today, but this is the tracking index. So every day, and it closes at 3:15. So the actual close for VXX yesterday was 65.43. All right, it was 65.43. The previous day, all right, so here's today. So they've got the wrong close in here. The close was 65.43. Everybody write that down. The previous day, the close was 32.92. All right. Well, what kind of return did VXX get if it was worth 32.92 the day before and it was 65.43? Let's see. 65.43 minus 32.94. It was up $32.49. Divided by 32.94, it was up almost, I believe the tracking index was, what does the tracking index measure? It measures what the VXX ETN is supposed to hold as a portfolio. So it's just like the SPX is a tracking index. There is a tracking index for every ETF and ETN. Not NAV. NAV is what they are. NAV is the ETF's actual net asset value. The tracking index is what that net asset value wants to do. So imagine a portfolio that doesn't have any transaction costs and just looks at closing prices. All right, that's the tracking index. All right, and that is what VXX.IV is. That is what the goal of the managers of the VXX portfolio is, to track VXX.IV. So now, if VXXIV was up 98% in a day, how much should the inverse be? Up or down? How much would the inverse be? Up or down? Right? Because remember, the inverses are not tracking the daily point movement. They're not the inverse of the daily point movement. They're the inverse of the tracking index. They're the inverse of the daily return. Yeah, no, they lost 98%. So you're saying, well, why do they have to do this crazy hedge? Why do they have to take everything off? All right, well, there's a couple of reasons. So what if VXX had been up 115%? What if it was 75 instead of 65? How much would XIV be down? Theoretically, how much would that portfolio be down? So if VXX is up 115% in a day, how much will XIV lose, theoretically? Right. It'd be down 115%. No, it'd be down 115%. These inverses, they can theoretically have a negative net asset value. So you're holding it and you owe the ETN money. Now, someone wrote, yuck. They feel the exact same way. So they have mandates where if volatility starts to really explode, they have to trade themselves. So what happened last night is that around 3 o'clock, 3:15, they realized that that VIX was up big and they had a ton of hedging to do. Okay? VIX was up big. It was up, it was at 23. So it was up 75%. So they had a ton of vol risk to take off. So the way they take this vol risk off is in what's called the TAS book. TAS stands for Trade at Settle. Trade at Settlement. So in this TAS book, they start, and the reason why they want to trade at settlement is that is how the best way for them to track the closing price of their tracking index. Right? Real simple. Super easy to track the tracking index if it uses closing prices and I'm getting the settlement price. Right? Well, what happens is that the amount of futures being bought in the settlement starts to really exceed how many are being offered. And so the bid, so traders start to buy VIX futures so they can sell it to the book at settlement. And then XIV and SVXY realize, oh, VIX futures just moved up more. I need to buy more at settlement. So guess what happens? I believe it does have an XIV.IV, but it's 6 of one, half dozen the other. All right, so they build on each other. All right, so each trade builds on itself. So, the trade at settlement book grows, market makers buy futures, futures rally, Traded settlement book grows again. It basically feeds on itself. So we saw VIX futures between 3 and 315 go from $23 to $33. So they rallied. They rallied a ton. Right, they're another 30%. But right. So most of that went away on the open. Now they still, you know, they still managed to you know, move them up a little bit after the bell. I believe the future settle is going to be like the future settle looks like it's going to be 23.90, so up 30-40 cents from the previous day. All right. All right. So that's the thing to remember. That is why XIV blew out. SVXY does not have that same mandate. They are going to stay open. They are going to continue to trade. And with VIX now at 30, it's very difficult for them to blow up. And then you have XIV is going to shut down. ZIV, I believe, is not. All right. Even though it's had a rough go of it, ZIV is not. All right. If I were to short UVXY tomorrow, how do I watch so UVXY doesn't terminate? Well, UVXY would terminate on the downside, not on the upside. So if you were to short UVXY and it terminated, you're probably happy. So anyway, I wanted to make sure everybody's aware of what just happened with the VIX piece. Now, it's clearly still working itself out because you can see in VXX, it moved $3 after the bell. Futures rallied a couple of bucks, but they didn't have that same insanity. All right, and SVXY was off a little bit after the bell, you know, 30 cents, but is now up. So there's definitely some trading moving around, moving these pieces. All right, so the question is, why does XIV have to shut down if VIX goes back to 20? So they have in their prospectus a clause that states if the VIX futures ever move as such that the tracking index goes up 80% in a single day, they have the option to shut it down. All right, it's always been theoretically possible. It made a lot of sense for a low VIX for that in a low VIX environment that could happen. And my understanding is Credit Suisse didn't really like managing the book, didn't want it, didn't like the risk, and was happy to shut it down when this happened. So anyway, to sum up my thoughts on what's just happened before I take questions. All right. I don't remember. That sounds right. Before I take questions, I feel like we're coming to an end of a lot of this silliness. You know, after hours, we didn't see a huge sell-off, just, you know, 2 points in SPY. The S&P futures didn't do anything crazy. All right. VIX futures are still working themselves out. Right. As I stated, they're still working themselves out. But the craziness that happened yesterday, there's tons of money that is short VIX futures piece. That piece came off. All right. So I would say a decent piece of the pressure that was causing VIX to explode higher came off. There's still a little bit, but I think that's working itself out today and tomorrow. And then from there, you can see SPY, despite what happened yesterday, was up big. SPX was up big. Right? VXX was off. You know, it's up a little bit after the bell, but that's from the movement in the VIX futures. Right? But yeah, and someone's saying VVIX still 161. Well, VIX is 30. VVIX should be 161. You know, I feel like option prices are probably at a point where they're starting to look at like interesting. And yeah, the big thing is futures are still backward. So for those of you that have heard me talk, one of the things I always say is when VIX futures go fully backward, and by that I mean VIX is higher than the front month future, which is higher than the next month out, which is higher than the next month out, which is higher than the next month out, which is what we're seeing, right? Feb is above March. March is above April. April is above May. May is above June. June is above July. All right. When we're in this kind of a contango, none of that, I'm an income trader, I have this plan and this plan and this plan, tends to work real well. All right. This is the time when all your best laid plans go out the window and your best option is to trade what's in front of you, which is what I've been doing. Trading what's in front of me. And that's kind of the approach that needs to be taken. I do think that we're probably coming to the end of this craziness. Maybe, you know, give it a week. And, you know, it's going to take the VIX a long time to get back to 12. But, you know, I could see it back below 20 in, you know, by February expiration if the markets rebounds. All right, so the question is, so did Credit Suisse lose big bucks? They lost some, but not as bad as you would think. Do XIV owners get what do they get for their shares? Whatever the closing price of XIV is, now, don't quote me, but this is my understanding. All right, obviously your best bet is to talk to Credit Suisse. But my understanding is whatever the kind of book value is of your XIV holding will be distributed to the shareholders. All right. And then is getting into ZIV or SVX now any beneficial? So one of the things to be aware of is that we actually currently have a positive term structure, which means front month stuff is more expensive than back month stuff. That does put a wind in the face of ZIV or SVXY. However, if you think that, you know, we're going to have a complete reversal and short vol is going to pay really well very soon, then either of those would make sense. Is being long VIX currently stupid? No. All right, remember, VIX is 29. VIX futures are 23. There is, if VIX sits here, there's a lot of money to be made. I do like, you know, I don't like just being naked long calls. VVIX is 160%, but call spreads make some sense here. I'll be honest, as a hedge against a portfolio. All right. So I do like some of that. Can SVXY close to as well as XIV? Yes. Although right now the indications are they are not going to close SVXY. Really big disconnect between VXX and UVXY. Should UVXY have twice the move? All right, so I had thought this as well. So here's the question. Really big disconnect between UVXY and VXX, right? VXX was down 2.4%. UVXY was down 33. However, here's what I will say. UVXY sets its close at 3 o'clock, and SVXY, or excuse me, and VXX sets its close at 3:15. So what you're actually seeing is that you know, one was, or the other way around, excuse me. So that's really what you're seeing, is that it's the difference in closes, it's not the percentages. So believe it or not, I had thought there was a disconnect. I was wrong. I reached out to an expert source that I know, and they informed me that, In fact, it was not exactly correct. All right. Call spreads on VIX or UVXY, SVXY. All right. I'm long SVXY about 200 shares. What should be watchful for until I hope it come back? Well, I think the big piece is that, can VIX futures get back into a contango? That is what drives SVXY. That is what makes it act the way it does. And while VIX futures are backward, it's going to be hard for that to make a lot of money. But if they do go back to being in a contango, SVXY could make some dollars quickly. It'll take a long time to get up to your cost basis. But, it certainly could rally. All right, and what is your outlook for the VIX for the Feb 14 future until now? I probably would lean slightly bearish. I would probably lean slightly bearish. All right. So while I'm taking questions, I want to show you guys something. So we have just developed a new product called the Vol Newsletter. All right. And what the Vol Newsletter is, Andrew's the main writer. I am the assistant writer. He and I work together, but he and I, since we both run a Vol Fund, basically developed the portfolio together. And it is a portfolio that trades the Vol ETNs, VXX, VIX, SVXY, UVXY, and trades them in a smart hedged fashion with the goal of making consistent dollars. All right. Now, here is let me pull up the track record here. This is just the track record on the year. And we're up, you can see we are up, current trade up 150. We closed the VX, our previous trade on Jan 31 for $500. We closed these two for a small profit. We closed our Jan 17 trade for a profit. We lost on our Jan 9 trade. And we won on our Jan 2nd trade. So we've done 6 trades. We've had 5 winners and 4 losers. Or 5 winners and 1 loser. Here's kind of the summary of the product. All right. This is kind of like the summary that we'll put out. It kind of explains the conditions of the VIX. What the trade is that we're doing. And then Matt walks through anything open. All right. In addition, once a week, Andrew is going to do a live webinar where he is going to talk about kind of what the vol conditions look like and how vol is trading, and he'll take questions. All right. Now, what we're offering is Andrew did a VIX Made Easy course. What was it? Last month. It was a great class. Thank you, Danny. So for a 1-year subscription pre-launch, we're launching it next week officially. We've had test subscribers with our own individual community for the last month. So we did have about 100 people following the trades. So what we're going to do is we're going to do 1 year for when we offer it to the general public after February 15th. It's going to be $1,400 for the year. We're offering it for $797 for the year. Plus, you get the VIX Made Easy class, and you get 2 weeks to change your mind if it's not a good fit for you. All right. So, $797 VIX Made Easy class, 2 weeks to change your mind. If you are interested in that offer, and thank you, Danny. I'm glad you thought it was a great class. All you have to do is email me, marketoptionpit.com, and tell me that you want to take the offer, and give me your phone number, and we'll reach out to you. All right. Now, that's the big offer. Again, I wasn't planning on doing this. We decided to do this morning, but I figured people would want to know. All right. The IV and VXX and VIX is super high at the money. Can I repeat the email? My email is mark@optionpit.com. There it is right there. So it's a 2-week risk-free trial. And you get the VIX Made Easy course. What else could you ask for? And we got a great track record, and I think people are going to be like, is it an on-demand course? Yes, that is. The VIX Made Easy class is. We will record all of our vol classes as well, so you can catch them later. All right, now, the IV in VXX and VIX is super high at the money, so buying a long put costs a lot of premium. Would you recommend a put spread instead? I mean, the interesting thing about VXX and VIX is as you drop, the volatility actually drops. So I would tell you that, you know, an out-of-the-money put spread makes some sense. Yeah, an out-of-the-money put spread makes some sense. So, boy, we are watching some crazy moves in VXX as it disconnects from the future. Maybe a call credit spread would be interesting. I like, you know, I'll be honest. Today I was buying kind of near the money puts. That was my main trade. I want that delta. So that was my main approach in the fund. For VXX, I also did some stuff in VIX. What is the expected ROA for the backtest you have done for my new strategy fund? You know, we don't do a lot of backtesting. We just know it works. That VXX out of the money fly could work. I've just never been a backtest. You know, as a trader, we usually can see where the value is, and we've done well. All we're doing is taking advantage of what's in there, and then trading the vol around it. So that's kind of what we were doing. Look at May. That's fake. Force sellers of their assets in a significant market moving way. Yeah, I mean, that's what happened. Yeah. What about the short vol trade that was not executed through these ETNs? Are those traders wiped out and will be forced sellers of other assets? I mean, I think we've already seen most of that. That's kind of what happened last night. That's why the S&P moved the way it moved. So we saw VIX futures get a huge bid. It's not gonna. They're not really liquidating XIV. I mean, they will, but they don't have a lot of assets left. I mean, the AUM of XIV is what? 50 million bucks? Who cares? What are they going to do? How can I easily calculate the future value when things are nuts like they were today? Well, the answer is you can't easily calculate the value. You have to know, right? You have to know what you're looking at. Add 10 to 10 call? I'm not sure what that question is. Oh, yeah. I just use theoretical value. That's the best you can do. So I just will use a theoretical value to kind of figure out what everything's worth. You'll be providing the trades that a trader can follow. Yes. What time will the trades be published? Once a week, usually in the morning, usually Tuesdays, sometimes Mondays. When the market's open. All right. And we got a new members area. How much beta slippage will UVXY have? It really depends. On these crazy moves, that's when the beta slippage happens. That's crazy moves. So I have time for a couple more questions, and then I got to be on my way. Do you ever short UVXY on its way up or down? I'll use puts, yes. Do you think the drop in SIBO is too much or more to come? I think it's probably just about right. They're going to lose some business. This is also a bit of a PR problem for them. You know, it's never good to be the exchange, the main exchange when for a fund that wipes out $1 billion. Once your published trades have to place it immediately. You know, depending on how fast things are moving is how time sensitive things are. Vibrant, you know, it's just like everything, right? On a relatively slow day, it's typically not. But like, think about today. If I put something out in a minute, it was probably too late, right? So, all right. So that's what you have to think of. I don't think, you know, how worried should you be? I don't know. My understanding is they're not in a hurry to do it, but only the pro shares people can tell you that. Really, I'm not. You'd have to go inside their heads. In your head, XIV, XIV, XIV. Yeah, there's some silliness going on with the ETNs again. What's happening? And I'm going to shut down the recording now.